And just like that, guys, we're at all-time highs again on the S&P 500. What a day on a Friday as well. This is awesome. After we got the August labor data, which honestly was not that great, the U.S. economy added 22,000 jobs, and the unemployment rate hit 4.3% in August, as overall the labor market is continuing this slowdown that we've been seeing, right? So I want to break down what's going on with the labor market. We'll cover the news that came out, and of course the charts. We're going to break down what's going on here on the indices, guys, S&P, Nasdaq, and we'll go over some stocks, some earnings, Lululemon in particular, which is completely, man, it's it's not looking good for Lululemon. So we have a lot to cover. Hit the like button, subscribe, do all that, and let's dive right into it. So the S&P 500, looking at SPY here, hit all-time highs today, guys, at $652.21, and now actually it's pulling down in real time, funny enough. So you can see on the intraday, we got this data at 8:30 a.m. East Coast time. The market ripped right after that. Then we chopped around into open. Then we popped a little bit, hit that all-time high, and now we're starting to slip. You guys can see in real time. And I don't think QQQ hit all-time highs. It hit 581, but I don't think that's an all-time high. It might be. Yeah, it's not. It's almost, though. It's almost there. It's about $2. It got $2 away from all-time highs. And the good thing overall here, guys, is remember the Head and Shoulders we covered on QQQ? The neckline was at 577, 576. Guess what? We broke out of that. This is a very good sign overall for the bulls that we're going for the all-time highs. And it's, again, lagging a little bit behind SPY, but it looks like it's right there. It's right there. So overall, as of right now, after we got this data, and I want to jump into it here right now, but overall, we're hitting highs, guys. S&P's all-time high. VIX is down. Nasdaq's right behind it. Let's see the Dow. What's the Dow looking like? I don't think the Dow would be at highs right now, but it might be. Where the heck is it? Here it is. Actually, yeah, guys, holy moly. The Dow hit an all-time high as well. 45,770. Think about that. All-time high Dow, all-time high S&P. So let's just dive into these numbers before we go over some stocks and cover, some earnings here. So let's pull up Safari, boom, bada bop. There we go. So we can see right here, guys. We can see the Canadian unemployment rate and the employment change there. Yeah, Canada, it's not looking too hot, guys. Their unemployment rate's at 7.1% on a side note here, and it looks like they lost 65,000 jobs. Oh man, what's going on there? But we can see here, guys, in the United States, we added 22,000 jobs, and the estimate was for 75,000. Yes, you heard that right. And last month, we added, it looks like 79,000 jobs. So it's not good. Honestly, I don't know how the market popped. I'm assuming it's because maybe the unemployment rate didn't spike up aggressively. That's a good sign. But we can see, yeah, the jobs added were 22K. 79K was what we had in July, and 75 was the what's it called, the estimate. So we were well under that point. And if we come over here, we can see, if we zoom down a little or scroll down a little bit, the unemployment rate did go up a little bit. It was at 4.2%, I believe, last month. Now it's at 4.3, so it's not like a dramatic increase, but it was an increase nonetheless. And like I said, economists had expected the report to show 75,000 jobs were created in August, with the unemployment rate forecasted to rise to 4.3%. So we were expecting that unemployment rate to go up a little bit, according to Bloomberg. But man, not the jobs miss. And we can see here it goes over the jobs in July a little bit, blah, blah, blah. They revised the figure. This graph right here shows, what does this show here? It shows the U.S. labor market overall summer slowdown. We can see, yeah, it's been dumping off here. The monthly jobs added, we can see in this greenish blue color, it's been going down overall, and the unemployment rate's been creeping up. It's the reality of where we're at right now. And back in the end of last year, beginning of January of this year, we saw a huge spike in jobs added. It looks like in December, 323,000. At that point, that was the highest in like almost 2 years. But it's dropped off since. In 2025, the best month we've had was April. We added 158,000 jobs in April, but it's been really collapsing since, man. In May, we added 19,000 jobs. Lost 13,000 in June, July 79K. We covered that, and now in August 22K. But it seems like it's starting to go back in the positive direction, I guess you could argue. We added 79 in July. That was much better than what we saw in June, obviously, and in May. And now in August, even though it was way less than the estimate, it was 22K added jobs. That's still higher than what we saw in May of 19K. So we're kind of noticing some, I guess favorable outlook on the data, or not outlook, but we're seeing it progress in the right direction, if you will. And with rate cuts coming in September, that's going to change a lot of things as well. So it's hopefully going to spur things a little bit. We'll see how that goes. Make the economy, juice it up a little bit. We'll see, but that's kind of what we're looking at. And average hourly earnings rose 0.3% over last month and 3.7% over the prior year in August. And Wall Street expected hourly earnings to have increased 0.3% over the prior month and 3.7%. So pretty much right in line there with Wall Street. But yeah, that's pretty much it. Looks like here by industry, if you guys want to look at the industries, Friday's report showed education and health services were the largest job creator, adding 46,000 employees during the month. Losses were the sharpest in the durable goods and business services industries, where 19,000 and 17,000 jobs were lost in August. Think about that. There were also 16,000 jobs lost from the government sector in August, which makes sense with what's going on in the government right now. But yeah, that's crazy. So they're adding jobs in education and health services, which kind of makes sense. As the start of the new year, right? Health services make sense. The school year, that is. And losses in durable goods and business services industries. So interesting times, guys, heading into the new year, or not the new year, but the end of the year here. And if we go back over here, let's cover some stocks. Let's cover some stocks, man, and see what's going on. As overall, like I said before, Lululemon's one I want to cover. It is collapsing. It is down 15%. The stock actually got all the way down to $163. I think at one point it was down 20%. So Lulu's getting demolished, guys. Obviously, the stock is, but business-wise, I think heading into the report, the stock was down 45% year to date, one of the worst in the S&P, and now it's down even more, obviously. So they're getting the worst of it from these tariffs, essentially. They said their profits are going to get hit by $240 million this fiscal year, I believe. And in terms of their guidance, it was very bad. Their guidance, guys, was well under the estimates for the full year. Let's see if we can find it here. I was looking at this before this morning, but let's see. I mean, it was really bad. I mean, really, really bad. I think, were earnings... Wait, they were yesterday. Oh, yeah, they were after the bell yesterday. So, yeah, Lulu did. I mean, they beat EPS, it looks like. Yeah, $3.10, pretty much the only good part of the earnings. That beat the $2.90 expected, but they missed sales, $2.52 billion versus $2.53 billion. And their EPS, GAAP EPS for Q3, look at this, guys, 218 to 223 is what they're expecting versus the analysts' $2.94 expectation. Terrible, right? And they see sales of 2.47 to 2.5 versus 2.56 billion. Not as bad, but still under the estimate. So you get the point. They're struggling. Full year guidance, next quarter guidance. It's a rough time for Lululemon at this point, and it's getting so bad to the point where it's like, man, maybe I should even consider buying some here. But it's like I don't even want to deal with a company that we've covered this before, that's in turnaround mode, or that's dealing with a lot of negative pressure right now with tariffs, and who knows what's going to happen with Trump and China and the deal. Will there be a deal? When will it happen? There's just so much crap I don't want to deal with, which is why that's kind of the main reason why I don't want to buy Lululemon. But man, they do make quality products. The stock's trading at a freaking 6-year low now. All the gains from the 2020s are gone. So it's one that I might dive deeper into. I mean, I have looked into it. About a year ago, I was gonna buy the stock. I mentioned this before. When it was down. If I show you the 1-year chart, you'll see. Not even a year ago. Actually, yeah, it definitely was a year ago. When was it? Yeah, it was. I believe it was like right around this time period. Yeah, back in June of 24, August 24. It got down to like 225. I was like, man, maybe I should buy some here. It's just ridiculously oversold. And I didn't buy it, but it did run a good chunk. It would have made a nice trade. I probably would have sold out if I bought it. I would have took the profit there. But now we're down even more. Think about that. We're down even more from where we were a year ago. So I don't know if it gets beaten down more, guys, into like the 140s, 50s, I might throw some money at it for a little short-term rally, or not even a short-term, maybe it sees a similar rally to what we saw last year. But then again, tariffs, it's difficult to predict this. The tariff situation is, it's a wild card. Nobody knows what's going to happen. So that's Lulu. It's looking rough. It's looking very rough. Tesla, though, guys, 3.4%. We called this out yesterday. The breakout is coming, in my opinion, on Tesla. We can see here it's starting to break out of the wedge. You guys see that. We're taking out slowly the highs from a couple weeks ago. Not yet above the highs from, it looks like, the end of August. We're right there, 355 right now, 350. But if we're able to break 355, 360, Tesla's going to go, I think. I think it's going to run a little bit. That's just my humble opinion. Rivian keeps moving as well. Looks like Rivian's up over 4%. We have a little cup and handle action right now on Rivian. Keep your eyes on it. Micron is up another 4%, which I think we called out yesterday. Now it's testing the highs from a couple weeks ago. We hit in the middle of August about 130. If that breaks, we could be running. So keep your eyes on Micron MU heading into earnings later this month. At the end, 23 or the 23rd rather of September, we're getting their earnings. So we have a cup and handle potential breakout forming here on Micron, and we'll do one more. Let's see what else is moving today, guys. One more, why not? Warner Brothers, WBD. Actually, no, screw Warner Brothers. Wait, SoundHound. Let me look at SoundHound. That one looked interesting yesterday, or maybe Hims and Hers. We covered that one yesterday. Keep your eyes on this one, man. Although it's down about half percent right now. If we break $50 on Hims and Hers, based on the chart here, guys, I think we're going to 60. It's a high short interest play. I think there's a lot more upside. What do you guys think, though? Let me know in the comments. And with that being said, how long are we in here? 14 minutes. Oh, man, we got to wrap this up. We're going to wrap this up now. Hit the like button, subscribe, join the email stock newsletter, check out the Patreon if you guys want to keep up with what I'm doing in my portfolio, stocks I'm buying, trades I'm making, all of that is down below. And with that being said, cheers. I'll catch you all in the next video.